Hi, I'm Blake Janover, and I'm the founder of Janover. We're traded on the Nasdaq. The symbol's JNVR, and I want to tell you a little bit about our business. It'll be pretty quick. So broadly, we're connecting the commercial real estate industry, this multi-trillion-dollar industry, and let me tell you what that means. First, um, there's this expression: culture eats strategy for breakfast, execution eats strategy for breakfast. All these things. I think that the most important asset of any business starts with its people, their experience, and what they've done. I've personally been involved in billions of dollars of transactions. I'm a Harvard Business School alumnus. I've employed nearly 1,000 people all over the world. I've had wins, I've had losses, very significant experience in the multifamily and commercial real estate industry, specifically at the intersection of technology and capital markets. Our CFO, who's the other half of the executive team, has built. He was at PetMeds for 15 years, 1-800-PETS, PetMed Express. They were traded on the pink sheets when he joined at 50 some odd cents a share. When he left 15 years later, as part also of a two-person executive team, they were around $57 a share. They'd returned a third of $1 billion to shareholders through repurchases and buybacks. They went from, I think, losing $3 million a year to making 30. The rest of the team and board are also extremely experienced and competent. I think this is worth mentioning. If you're long-term oriented, this is a Bezos quote, customer interests and shareholder interests are aligned. Insiders own more than 50% of the company, and we are obsessed with delivering value to our customers. And our customers are the owners, operators, developers, and professional service providers in this multi-trillion-dollar commercial real estate industry. So the market is super fragmented, and it's ripe for transformation. So technology has already radically transformed residential finance, residential mortgage finance, consumer finance, and what have you. But in the case of commercial property, capital markets, insurance, and the like, it's still kind of stuck in the Stone Age. And it's inefficient by design. So there's tens of thousands of counterparties on the debt and insurance side of the business with millions of possible permutations. In the equity side of the multifamily and commercial real estate capital markets, there's all these different structures, GPs, LPs, they can't connect. So it's our job to put the pieces together. And I like to think of it as we're building the technology picks and shovels of the original picks and shovels business, real estate. So we have a few products. One of them is Engage. This is where sponsors, GPs, owners, folks that are raising money for large multifamily and commercial real estate projects can connect with accredited investors to build their pipeline of future investors. You could think of it as a Zillow or a LoopNet or a Redfin for raising money for deals. And that's called Janover Engage. And that's at engage.janover.co. And then a seamless connection to Engage is Janover Connect. And this is an investment portal that commercial real estate owner, operator, developers, fund managers can use when they're raising money. They get their own domain. Their investors can log in, look at their deal, vet it, sign docs digitally, submit investment, receive distributions, get K1s, monitor the deals online in a super professional institutional platform. And then what seems to be the fastest growing part of our ecosystem is we have a debt advisory team at Janover that specializes in that kind of like $2 to $50 million space of placing senior debt for construction, bridge, purchase, refinance, and what have you. And our debt advisors use our platform. Our platform is software and data built to make us the best in the world at placing debt. And we have more than 10% of the banks in America, 35% of the top 100 credit unions, 2,500 total lenders, all in the commercial and multifamily space, giving us their data. And our debt advisors can kind of log in, put together an offering memorandum for a deal, take it to market, get quotes all through the platform. And now we're licensing that out. This is another a software and data licensing machine that we have. By the way, just skipping back, since this is kind of like a real-time thing, on the Engage platform, what makes it particularly attractive, again, is the data. So we have more than 40,000 LPs, real estate LPs, in our platform. 20,000 of them self-accredited. I think broadly all of them have invested more than $1 billion in real estate deals online. So our data is an advantage, our software is an advantage. And we've built highly customized generative AI and conversational AI in the commercial real estate space, and we are licensing it now exclusively to the enterprise. We recently announced a very large publicly traded commercial real estate services provider, publicly traded, that recently licensed our AI from us, and we're in additional conversations on the subject. So what are we doing? We're building the industry's most comprehensive product suite for commercial real estate capital markets, right? So CoStar built this for investment sales and all the data and all the rich information around it. We're building it for capital markets. And since we're talking about the business, most of that new software and data licensing was launched just in the third quarter of this year. And we're undergoing this seismic shift. So we're shifting from revenue that was entirely one-time transactional marketplace transactions and advisory to recurring and subscription only. Like that's where our investment capital, time, energy is going. Time and energy. And the story's in the numbers, right? So ARR in our business, our software, our annual run rate revenue from software and insurance grew 0% in Q4 last year, 4% in Q1 this year, 6% in Q2 this year, 58% in Q3 this year. Growth increased 10x on the quarter. And we think we have a pretty repeatable plan on how to continue running this playbook. Net income, we started Q4 last year with a nearly $1.2 million loss. We improved it 16% or so each of the last two quarters, went from a $1.2 million loss to a $950,000 loss to an $800,000 loss. That improved about 40% quarter over quarter. Not even to speak of how significant it was year over year, and that's just in the third quarter. Interestingly, perhaps, as of the time of this deck, our share price was 54 cents a share, which gave us a $6 million market cap. If you were going to compare that to pre-seed technology companies, that's kind of where we're being valued. But we 10x'd our ARR growth percentage quarter over quarter. So as of the time of this deck, we had $2.8 million in the bank, $0 in long-term debt, a clear path, what we think is a very clear path to continued sustainable growth, profitability, cash flow positive, and it's more than 50% inside owned. So for additional information, you can email ir@janover.co, or you can email me, blake@janover.co, and you could add us to your watch list, JNVR, and I look forward to sharing the story again in the end of Q4.